Okay, good evening, everybody. Hope everyone's good. Hope everyone is well. We'll start with the usual. Can you all hear me? Is the sound levels good? More importantly, are we rubber banding tonight? Is it lagging or does it look okay to start off with? I've got greens across the board, so hopefully that means we are in the right place. Stuart, nice to see you there. Hope you've had a good day, good week so far. I'll just wait before I dive into everything until someone at least confirms where we're at, what we're doing. And we'll go from there. So if you can all hear me, just let us know. And yeah. Hey there, Adam. Yep, all good. Thanks, Stuart, for that. Okay, guys, so welcome again to another Avengers call, Tuesday, the 27th of June. Can you believe it? A couple of days' time, and we will be halfway through the year, which is pretty crazy when you think in terms of this bear market. You know, we've been looking at that probably 15, 16 months at the moment. Potentially we've turned. We'll have to wait and see on that one. But we are less than 300 days away from the halvening, which is probably more important. It's less than 10 months away. So yeah, really amazing how quickly these months tick by, especially when we're only chatting really once a week. And we've got loads to cover tonight, so thanks for that. We've got a couple of questions that we'll go through on the Google Sheets. Bit of news, as we always do. We do have a research token, Talos, I'm not sure how you pronounce it, which we will dive in, have a look at. We'll look at some chart. I've not looked at a single chart all day, so it's going to be kind of news to me as we're going through that, but hopefully we will. As always, it's a case of, if you've got any questions, anything you want to comment on as we're going through, please just drop it in the chat. I will, of course, be looking over there and checking out where we are. But let's just dive straight in. And I'm just going to get everything looking right. Okay, the usual charts that we see. Since we last met, when was it? The 20th. So you think the 20th, Bitcoin's price was at 27,000. Since then, we've actually touched 31K. So we've had a fairly good climb out of our position. And we talked in the last call when we broke down Bitcoin's price action, whether or not we were seeing a rise 3 on the daily. We'll go into that in a bit more detail, but I think this last week has kind of shown that we are looking at a rise 3 on the daily. Now, we've actually already surpassed the peak that we had in mid-April. So technically, Bitcoin's price doesn't necessarily have to go any further, but we'll have a look at some potential targets, just reinforcing what we said last week of where this can go. In terms of the dollar and the S&P, I mean, the S&P's been ripping just like Bitcoin has. The dollar's kind of actually been meandering. It's just been rubber banding a bit like I was last week. Up and down, up and down. So we're kind of hovering in around that 102 level. Mr. Taco, it's good to see you again. He's saying the weekly is interesting too. Well, I'll tell you what, when we do get to it, we'll start on the weekly. We'll work our way down. Weekly, daily, 4 hour, hourly. If we've got time, we'll have a look at 15, 5-minute type thing. But we'll go from there. In terms of the questions, I'll cover those later, but there's a few to go through. There's a question on Grayscale. There's 2 on Casper. You guys are desperate to get me in trouble with Siren, because typically my views are very different, and it's not because I don't like Casper necessarily. We went through in detail a few months ago. It's got some great tech around it. I do see some concerns that I personally have, which would significantly limit how much I would expose myself to it. But when we get onto those, we'll go through that. We'll answer some of the questions and hopefully just give you sort of a tempered view, certainly from where I sit with that. But we'll dive into the news. Oh, and I was obviously reading ahead of myself and kind of cover what we were titling today's call. And that is effectively re-looking at what is the Fed's endgame, particularly towards crypto. Now, for those of you that have been tuning into these regularly, 6 months ago, back in January, one of the first ones we did of the year, it was actually what is the Fed's endgame. Now, that was more looking at how they're going to manage the interest rates and how they're going to tackle inflation and what that knock-on effect will have with cryptocurrencies. But 6 months later, we're revisiting the same question. However, given what Chairman Powell said over the last 7 days, with a bit of a different stance towards that. And for those of you that weren't aware, because it happened the day after the Avenger call. So last Wednesday, Chairman Powell had to do one of these 6-monthly sitting in front of Congress or the Senate. I don't know which. I should really know that. And just have a discussion. And naturally, the discussion moved towards cryptos at one stage. And some of the comments that he made were certainly interesting in terms of the Federal Reserve's view on cryptocurrencies and Bitcoin. And that is, I'm not saying it's completely different to where the SEC is, but maybe getting a little bit of mixed messaging, which again may align with some of the other news we covered last week with major investment firms such as BlackRock filing for ETFs. Anyway, what did Chairman Powell actually have to say? So straight out of the bank, we do see payment stablecoins as a form of money, which is pretty, stablecoins are, you could argue, maybe not the backbone, I'd say probably Bitcoin's the backbone, but certainly the nervous system of the cryptocurrency market. And, it has roughly around about 10% of the market's based in stablecoins at the moment. And here we have Chairman Powell actually acknowledging that stablecoins are part of the future. Now, it's not exactly a stone's throw from stablecoins to CBDCs, obviously. And with my tinfoil hat on, I'm sure that's potentially where it's leading. But it does beg the question as to where he's particularly going that within the crypto market. And he adds that the ultimate source of credibility in money is the central bank. And what he's trying to say there is that he believes that the Federal Reserve and the Fed need to play a central and robust role in the management and overseeing of stablecoins. For example, he thinks that they should have national, I don't know if that's what they call it, federal powers rather than at state level. And they should be significantly controlling those, which, given their stance only a few months ago with the likes of Silicon Valley Bank and Signature, and the fact that they went under and everybody was blaming cryptos and stablecoins for that, it's kind of interesting that we've had such a U-turn at such a quick time. But the other big takeaway soundbite that he mentioned in there was he remarked, and it's down here, that cryptocurrencies such as Bitcoin have staying power. There's another article which gives, I think, the full quotation, which is probably a little bit better. No, it's on this. But effectively, he states that they do have staying power as other asset classes have shown, saying that it could be having a similar level of staying power to other asset classes. So, okay, maybe my thumbnail's a bit misleading in terms of saying that he has stated they are an asset class, but he was certainly putting some dots on a piece of paper for us to make those lines to come to our own conclusion. So again, a very interesting conversation that was being had. Now, the rest of the 2 or 3 hour talk was on all sorts of other things, so nothing major to go away from that. But I do find it interesting the timing of which we're seeing. So if we just draw ourselves back to, as I said, start of the year, a lot of confusion in terms of where the Fed, where the SEC, where the CFTC sit in terms of cryptocurrencies and stablecoins. A lot of FUD being pushed around on both sides of things. And we saw in March, I think it was March, might be end of February, it was March, the collapse of several major banks within the United States. And a lot of blame was laid on the doorstep of cryptocurrencies because these banks heavily supported cryptocurrencies, which is going to be part of another conversation we're going to have about True USD later on. Then we've seen all of these filings from the SEC of court cases. I mean, again, only in the last 3 weeks with Binance and Coinbase, but we also had Kraken and I can't remember all the other ones that have had earlier on this year. So again, there was that Operation Choke Point, really trying to restrict and strangle any innovation that the United States may have within the cryptocurrencies. And we saw that the price of Bitcoin suffered from it. But then 15th of June comes around, suddenly BlackRock said that they're interested and they do file a spot ETF. Price of Bitcoin skyrockets from that. And then suddenly at the next opportunity, Chairman Powell's singing its praises. Now, whether or not he's trying to be Mr. Positive and thinking about where his next job may be, I have no idea, and I don't want to speculate on that. But I just find it very interesting that that's the position that we currently find ourselves in. Talking about ETFs, again, I scrolled to the bottom of this one. Let me just scroll all the way back up to the top. everyone's talking about the BlackRock ETF, and I mean, I'll spoiler alert, I'll skip to this one now. I mentioned last week that there were rumors that Fidelity were going to have some seismic news to announce. Well, again, they haven't officially announced it yet, but we're getting leaks again that Fidelity are expected to submit their own spot Bitcoin ETF. We don't have necessarily a date on that, but going back to this, a lot of people are talking just about BlackRock and then also Fidelity, but there's actually loads of ETF applications that are still currently in play. And I'll be honest, I didn't bother looking into what I'm about to say in as much detail, in the sense of there's different application forms that are filled out, and we'll go through a couple of those names at the moment. I'm wondering if they have different timescales to work with, and why some that are significantly longer than others still haven't had an answer to it yet, while more recent ones have actually been rejected. I don't necessarily know the answer to that straight off the bat, but I don't think that takes away from what we're going to have a look through. So yeah, people have been filing spot ETFs since 2013, and of I think there's been 28 rejections of spot ETFs. I think there's about 8 that are currently still outstanding. So we talked about it last week. One of the major reasons about rejections for spot Bitcoin ETFs was concerns from the SEC about market manipulation, and where that may provide some safety for investors in the future. We won't go down that path again. We covered that last week if you're interested in going back over the thought process within that. But in terms of just ones that are still to be announced, we've got BlackRock, which we've talked about, Wisdom Tree. So they filed one in March 2021, but you can see this was an S1. This is what I mean by there's different, it's not in this article. BlackRock's is like a 19 BC application. This is an S1. I don't necessarily know what that particularly means. We've got Invesco Galaxy have also filed one in September of 21. Still don't know where that one sits. Valkyrie, similarly have done one. ARK Invest, which we're going to talk about a little bit later on. Cathie Wood, some of you may recognize the name. They've filed several, and this can be quite confusing because they've actually filed 3. 2 of them have been rejected, and I actually think the one that's in this article here, I talk about June 21, has been rejected. I think there's maybe an oversight and an error in this. They filed one recently in April of this year, which is yet to be answered. Someone might correct me in chat if they don't think that is correct. Yeah, well, ARK is now on its 3rd application. It doesn't say when, but it was submitted in April of this year. Ones that have failed, there's a big list here. I'll post this afterwards. It's not necessarily what we need to go on. And so everyone's getting excited about BlackRock. Everyone's talking about how BlackRock are trying to fast track this, and we may get an answer relatively soon. But actually, because of all these ones that are outstanding in the forms that they are filed, it's believed that Cathie Wood's ARK is actually first in line for an answer on its spot ETF application. So I'll try and sort of read as much of this one as I think is relevant. But ARK Invest filed a spot Bitcoin ETF in collaboration with 21 Shares long before BlackRock did, and its application is reportedly first in line for the SEC's approval. So it'll be interesting to see what happens here. I mean, I have absolutely no idea the outcome. There's many different ways. They might reject it because they haven't proven some of the things that BlackRock later do. Or, if we are seeing that softening, we may actually get that approval, or we may get a delay. And that is not uncommon, unfortunately. But going back to the article, ARK Investment Management, a pro-Bitcoin firm founded by veteran investor Cathie Wood, is reportedly ahead in the race for the spot ETF exchange traded fund, or ETF. In mid-June, the investment firm BlackRock filed for an application. We're going to go through the timeline in a bit, which we know about there. Several reports suggest that BlackRock could be the first issuer of the spot ETF in the United States should it receive approval, but that might not be the case. Other applicants will be able to amend their filings with similar agreements at little cost. Okay, that's interesting. So maybe they can take what they've seen within the BlackRock applications and make some adjustments. So 21 Shares ARK, CBOE, that's the Chicago Board Options Exchange, are first in line because their next SEC decision date is August the 13th, 2023. And we don't have a date for the other, here you go, 19B4 applications like the one from BlackRock. So That's why they're suggesting that actually the timelines that we'll go through, there will be a decision on the August the 13th that will either be approve, reject, or delay, and push that back. And so I lost my train of thought with that there, because I'm trying to read ahead at the same time. So if we just have a look at, so this is a graphic here which kind of shows the timeline. Now this is actually based on BlackRock's application, but the dates and the days are effectively what we're looking at here. So on the 15th of June in 2023, bottom left-hand corner, iShares BTC ETF 19B4 was published on the NASDAQ. And then tomorrow, 28th of June, the iShares filing published on the Federal Register for the comments. And once that happens, as it says here, the clock starts, okay? And from then, they've got, I need to work it out, but that looks like approximately 45 days. And so the SEC deadline number one is actually the 12th of August 2023. I think if the previous article is correct, when the SEC is going to get that together, it's actually going to be the 13th. So I imagine the clock runs out on the 12th and then they make their decision on the 13th. And as I said there, after the 45 days, they can either approve it, deny it, or they can extend it. Now, I don't think any have ever got through in the first hurdle, but everyone was talking about how this has been fast tracked and we might see a response very quickly, rather than the standard 240 days. And that's just because there's an initial 45-day period for them to make a decision. If they do decide to extend it, as it says down here, they get a 45-day extension, which would then take us to the end of September, 26th of September, 2023. That's their next deadline where, again, they can approve, deny, or extend it. But this time it's not extended by 45 days. They would extend that decision by 90 days. And if that was the 90-day threshold we're talking about, that's actually taken us to Christmas Day of 2023, and we've eaten up pretty much 200 days, or just over 6 months of the application. We get to the SEC deadline number 3, and then again they can approve, deny. What a great Christmas present that would be for us all, just prior to 2024 and the bull run, in the halvening, or they can extend it for 60 days. And the absolute final deadline to either approve it would be the 23rd of February 2024. So that's the whole picture. That's, clock starts from tomorrow, 45 days, then another 45 days, then 90 days, then 60 days. That's how you get your 240 days. And the end of that would be the 23rd of February 2024, which is still ahead of the earliest date we would possibly think the Bitcoin halvening would be, which is the 25th of March 2024. But we've just talked about how quickly 6 months can pass, so that will be here before we know it. But it's interesting to see that how that's going to break down and where that might sit. Now, this is actually quite an interesting thread, covering a few other elements within it, which I will post in Discord rather than just running through it all. But it kind of goes through Grayscale's issue with the SEC and taking them to court. Now, the decision for that is actually due quite soon. It says here weeks and months because we don't have an exact date, but the clock is ticking. And so what this gentleman in here is to say that maybe there's not the coincidence, maybe this has been quite a deliberate filing from BlackRock. They kind of understand where they think the ruling is going to go, and so the timeline would work with them to make the application, have a court ruling come out prior to any decision that needs to be made, and then they are geared, ready to go. So yeah, this is where it talks about all the timelines for other ones like ARK, which we talked about. Anyway, it's quite interesting breakdown of everything and all the other things. I've just talked about what you can see on the green screen, whereas this is talking about decisions regarding Grayscale, regarding Coinbase, issues that they're having with the SEC. I don't think it actually gives in any detail with Binance, but I might be wrong there. But definitely worth a scroll when you get some time. Okay. And we talked about Fidelity, and again, we'll see whether or not that one comes along. Now, there have been other ones that have been announced. I can't remember who it was. Someone will put in chat, I'm sure. If Bijan's here, he'll know it. We actually had a futures ETF, in inverted commas, approved end of last week. But actually, it's just the way that the application is made is that they can effectively gear up to start doing it until the SEC say they can't. So it hasn't actually been approved by the SEC. The application has just been submitted, which allows them to get on with it. So, but that's a futures one, not a spot ETF. Everyone's really looking to see if we can get the spot ETF from that. So yeah, should be quite interesting. But again, just going back to, what's the end game for the Federal Reserve? Why the sudden change in stance in terms of the positivity? And I do think the comments that Jerome Powell made were particularly positive for crypto. Yes, they can quite easily be construed to CBDCs. I completely get that. But there's still a stepping stone that needs to be had between that. And anything that we can get the American financial system back into engaging with crypto companies, cryptocurrencies, I think is a net positive for the whole crypto economy. All we need now is not Jerome Powell, is Gary Gensler to come out and say that he's a big fan of it. I'm not sure that he necessarily will, and I'm not expecting anything quite of the sort. But we shall see there. Someone mentioned, I can't remember if it was a message to me or in Discord, that Jerome Powell's speaking tomorrow and on Thursday, I think. He is, but he's actually speaking for the ECB. There's no guarantee that he's going to talk about cryptocurrencies, and I'm sure what he's actually going to do is probably be rather smug about how the US is, I'm not saying it's controlled, but it's controlling inflation far better than Europe and the UK currently are doing. But we never know. We may get another soundbite or two about cryptocurrencies. We know that certainly Europe and the UK are far more open-minded about that, so potentially he might get some questions on that, but we'll just have to wait and see. But unless he comes out with something earth-shattering, I don't really see it driving the price one way or the other, if I'm perfectly honest. Right, does anyone have any comments or questions on that part of the news before we move along? Perfect. Bijan's here. How are we doing, Bijan? And you're saying crypto Twitter uses the futures ETF for clickbait sensationalism. I imagine so. The titles on it were approved. And you if you don't read the headline, that's what you think. But read a bit further down. I suppose that's what I'm here for. Are Europe open-minded? Both Belgium and Holland banned Binance in the last 2 weeks, I believe. Yeah, but what was it? There was an acronym that the ECB... the ECB, the EU Parliament passed, again with an M, it's like a 4-letter acronym, where they're going to start actually the process of clarifying regulations. Same with the UK, going through the process of that, which for me is a lot more open-minded. Belgium and Holland may have banned Binance for similar reasons that the UK have done it. May not meet the requirements for KYC and anti-money laundering, etc., etc. I haven't really gone into the details of that, but I get your point there. Okay, so I'm going to touch on TrueUSD a little bit again, because you just go back to what Chairman Powell said last week about, stable coins being an acceptable form of payment in the financial system. And then we've had an awful lot of FUD over the last 2 weeks or so about TrueUSD, what it is, why it's happened, and where the concerns may be. And I'll be honest, I don't know how I necessarily feel about this. Part of me is just thinking this is probably like a lot of FUD, like all the other ones were, because I've never held in TrueUSD. I didn't really do anything about it, if I'm honest. And this doesn't look like the right website. And so, I just sort of read the things. But we've seen FUD against Tether all the time. BUSD, that FUD's kind of genuine, given that they're closing down in the next 6 months. But we've seen it with many others. I think what people were worried about was this was going to be another UST or something. So where it was actually going to cause a potential issue. We've also had USDC, which was a stable coin that was blamed largely for the collapse of Silicon Valley Bank and Signature and the like. So what's going on and what is this? Well, TrueUSD is a stable coin like every other one you've ever heard about. They claim that you can get a TUSD 1-for-1 matched against the price of the US dollar. You can mint it. We're going to go through which companies are used to mint it. You can trade it. But more importantly, if you hold a TUSD and you decide to cash it out, you'll get $1 back for that, no matter what. And somewhere in a bank, allegedly, for every single dollar of TUSD that's in circulation. I mean, they started off by saying it was backed 1-for-1 by $1 in a bank account, as we'll see in some of the documentation. Now, much like all the other stablecoins are out there, it's also covered by cryptocurrencies and high yielding investment programs, which they don't really explain what they are, which is kind of concerning. But that's not unique to true USD, to be perfectly fair. So what is the FUD and what necessarily is the problem? Well, there's a company called Prime Trust. Now, TUSD used Prime Trust for their minting of their TUSD token. And so a couple of weeks ago, Prime Trust started getting into some significant troubles. And it's interesting to go through the timeline of how TUSD responded to some of these stories that were coming out. But I'll start, I think actually there might be one which has a better timeline. Yeah, here we go. The timeline of the TUSD. I'll come back to that other article, but this one's probably going to be a bit easier. So on June the 9th, TUSD announced it would no longer mint via Prime Trust. But it actually added that TUSD minting redemption services remained unaffected and will continue to operate as usual. And the stablecoin assured users that its partnerships with other banking institutions remained intact, allowing for seamless transaction. Well, the problem with that is that prior to the collapse of Silicon Valley Bank and Signature, the vast majority of TUSD's wealth, if you would call that, was actually being held in Signature Bank. Now we know that doesn't exist anymore, and we know there's been a massive strangulation by the US financial systems on any bank that is trying to hold those tokens. Now, I couldn't verify this except for just seeing it on Twitter, but it's been alleged, and I've got no reason to not believe it, that TUSD effectively moved all their funds from Signature, must have been in a timely manner in which nothing was jeopardized, and they've moved it to the Bahamas, and they're using the same bank as Tether. So I'm sure that is completely above board and nothing to worry about. But the key point into that is that the 9th of June, TUSD had stated that they would no longer mint via Prime Trust. So then a couple of days later, TUSD said that it was still trying to attempt to resume the minting with Prime Trust, but at that time, there was no real grounds that were being made. And because, as I was saying, Prime Trust was actually going through a lot of problems at the moment. There was an attempted buyout, which we'll cover in a moment, which unfortunately fell through. So they were struggling, which is, TUSD made the smart decision. Well, if they're struggling, we need to get out of Dodge. So then what is interesting is, and I'll have to go to this chart here. So this is the market cap for TUSD. So it's not price here, but we were sitting, anywhere from 800 million to about $1 billion from its inception. Oh, this only over the last year. Sorry, if we did it for all time, probably looks a little bit jumpier. But certainly for the last year, I'll go back to that one. For the last year, the vast majority of that, 7-8 months, has been between 1.1 billion, about 800 million. We had a big jump in March of 23. No surprise there. That's just after BUSD had its issues, and we're going to talk about the relationship that Binance has with TUSD now in a moment, but necessarily no surprise there. And it just sat at 2 billion for the last 4 months. And then on the 15th of June, same day as the BlackRock ETF was announced, suddenly $1 billion was minted out of absolutely nowhere. And the concern is, well, where did they mint this? They haven't actually said. We've gone 9th of June. They've stopped minting with Prime. They've said that it's still available, but we don't know where that's available. They've not announced it. They said on the 12th of June that they are trying to work with Prime Trust to get that minting capability back. That's not happened. And then on the 15th, bang, an extra $1 billion is printed. And suddenly we've gone from 2 billion to 3 billion. Okay. So on the 19th of June, so 4 days after that, TUSD again reassured customers that minting and redeeming were unaffected when it said minting through Prime Trust is still temporarily paused, while minting redemptions through our other banking partners are unaffected. And then, so what's that, 5 days ago? Yeah, this article, that must be today. Early on June 22nd, BitGo, who were trying to purchase, they had a letter of intent for purchase of Prime Trust, decided they were going to walk away from it. And then Nevada, which is the article I was going to show you at the beginning, put a cease and desist order on Prime Trust, and effectively all hell broke loose. What's interesting then is suddenly TUSD, as it said here, sent an email to everybody saying Prime Trust is halting all deposits and disbursements, and unfortunately that means you are unable to mint and redeem TUSD as well as any of the other true coins. So they actually do GBP, Canadian dollar, and Australian dollar, while Prime Trust operations are suspended. And what's interesting there is they've been saying for the 2 weeks prior to this that they haven't been using Prime, they've been using other people. And the question is, well, they never said who that other party was. Prime Trust were obviously struggling and didn't have the money to do this. And that's leading people to potentially put two and two together and come up with Window, suggest that this was actually just printed out of thin air. And if that's necessarily the case, and depending on how that was bought and where that extra billion and the volume that was done, has that artificially inflated certain tokens? And that's a question we certainly need to explore. Hopefully, I've not lost anyone here. Nothing in the chat, so you've either all fallen asleep, it's rubber banding and nobody understands what I'm saying, or you're just edge of your seat, can't wait for the answer. And neither can I. Right, so Prime Trust can't honour customers' withdrawals. The Nevada regulator said, right, cease and desist because there was a shortfall in customers' funds, where that was going. I'll post this article. I'm not really going to go over anything there. I don't think we get anything from it. Reading through, and you can. I put this one up because you can kind of see there was quite a few articles about Prime Trust. In June. This is just from Cointelegraph, but we had 1, 2, 3, 4, 5, 6, 7 articles about Prime Trust. Some company, I'll be honest, I'd never heard of until 3 weeks ago. Over the course of those 3 days, just and you see, thanks, Mo. At least someone's listening, and hopefully none of you have anything in TUSD. But yeah, so interesting. All these articles were just popping up. They're all, as I say, I'm not necessarily saying they're FUD, but people are suddenly coming out with what issues they're going with, and they generally might need to do that. But again, it's just the oddness of TUSD's actions announcing that they had no exposure to troubled Prime Trust, because in this one they're saying we don't have any exposure because we stopped it weeks ago. Yet there was an email. Now that email could have been sent out falsely. Of course it can. There's loads of stuff that could have been there. But there's just that conflicting thing, which led to people going, you know what? Something doesn't smell right. I'm going to look into it. And that's exactly what people did. And before we look into what they talked about, what has been interesting is the relationship of Binance with TUSD. Now, if you can cast your mind back to the collapse of BUSD and Paxos, we kind of speculated at the time that Binance, they're not just going to give up on having their own USD pair. They'll just find another USD pair and just, that'll be theirs. Because although BUSD has Binance in the name, it wasn't actually Binance's token. If you remember back, it was Paxos's, and they just allowed them to use it. And obviously Binance were the main, I don't know what you call it, owner or holder of BUSD. Well, for the last few months, Binance hold a considerable amount of the percentage of circulating supply of TUSD. And a lot of people were willing to believe that this is where they were going to go and fill the gap between BUSD. I mean, BUSD is still around, but we've only got about 6 months to go. I think it's the 24th of February. They have to completely cease minting and redeeming of that. So, over the next 6 to 7 months, we will see that completely go to zero. And then Binance has been starting to announce zero maker fees for TUSD pairs and zero traded fees. And it's not just for BTC, that's for all pairs across their platform. They announced it there. I don't think it takes place until the 30th of June. I'm trying to read in this article. Maybe I've mistaken that one. Maybe it is from that. Oh, yeah. All users will be eligible from the 30th of June until further notice. So, yeah. So BTC, TUSD, TUSD, BUSD, TUSD, USDT pairs will also have zero taker fees. So everyone will have zero maker fees, but there'll also be zero taker fees. Binance zero trading fees for USD stablecoin pairs will also expand to include all existing and new USD stablecoin pairs on Binance's spot and margin markets from the same day. So that's good if you are purchasing through USD stablecoins. Then you're not paying any fees, which is good for anyone wanting to use Binance. So there's certainly some questions need to be asked about, I don't think there's any question in necessarily need to be asked about the timing of this, but the fact that that $1 billion was printed out of somewhere and Binance hold the lion's share of that, it is very interesting. Then we get to this is just another little summary. I hope these tweets load. Actually, I'll come back to this one. What I think Bijan put this in the chat. Sorry, I've seen you put a few comments, Bijan. I'll come back to those. I think Bijan put this in the chat. But the question is that there was, as it says here, any clue why heavily inflated TUSD volumes are solely on BTC and not on ETH? So BTC TUSD is 1.9 times that of BTC USDT, and the Ether pairs is 0.017 times, which is kind of remarkable. What was also remarkable is on that particular day, the trading volume was about 1.7. Oh, it's more than that. I thought it was 1.7. It was actually much higher than that. It was, I think it was over 2 billion because it was nearly 90%, as it says there. But the trading fees alone just for BTC TUSD was close to 2 billion, if not more than 2 billion. Although I'm just on Binance. And if you think about that, that's fine. If it says in this article here, you have a market cap of 83 billion, but the overall market cap of TUSD was 3 billion. And in a single day, it was over 2 billion because it was like 90%, as it says there. So it must be much closer to about 2.5 to 2.6 billion just being done on that one. Makes it kind of interesting with where that's going. But yeah, so again, people are speculating that it coincided with the price increase of the BlackRock ETF. Well, actually, the BlackRock ETF announcement didn't really move the price at all. That's what people are suggesting that this printing of this extra $1 billion worth of TUSD, in which then was suddenly spent on buying Bitcoin. And depending on how this was minted, it could be argued that this was, this was effectively bought for free, drove the price up, and everyone jumped off the back of that. And if that's the case, then some people are going to get very rich off the back of that. So there's definitely some questions that need to be asked. It could just be a complete load of FUD, as we've seen in the past, and it's something that we need to be looking into. What is interesting is, despite everybody's shouting from the hilltops that there's no exposure from TUSD to Prime Trust, people have actually been shorting it, paying through the nose to short it. So people have been going on things like places like Aave, and it says here traders are paying up to 50% APY just to short the asset. And one user placing a $4 million short on the stablecoin. Now, actually, that probably wasn't the smartest move, because we can kind of see if we go back to price and move this over, I don't know, even the last 7 days, it's really not lost its peg. It's still at $1. Do it on a month. What have we done? We got down to 99.999, and even at the height of the announcements on the 15th, only got down to 0.997. So it still seems to have been able to maintain and sustain its peg throughout all of this announcement. That level of fluctuation is nothing for stablecoins. It's still relatively flat line. 2017, 2018, 2019, we certainly saw some movement on it, but now much smoother, much flatter. So I don't know how much that guy's paying in trying to short that, but hopefully he's closed his position, because it doesn't really seem to be moving at the moment, which may be another example of why this is just a case of FUD. But again, now that we've talked about that, and going back to what Chairman Powell was talking about with stablecoins being a solid backbone of the financial system, and then suddenly we have this FUD and this scaremongering about TUSD and whether or not $1 billion worth has been ethically minted or not, and it kind of lines in with it is stablecoins are the backbone of financial transactions, especially in the digital world. However, they need to be significantly monitored and managed. And this is like, I've just thrown that statement out there. I could really do with a real life example of that to come along quickly, so I can then use that as a soundbite to say, see, this is why we need to be involved in that. So again, maybe tinfoil hat, but interesting that all of these things seem to have been happening in around the same time. I don't know. Whilst I'm reading through Bijan's comments, what's everyone else's thoughts on it? Are you particularly worried about TUSD? Were any of you even exposed to it? Yeah. All right, let's see what. But Hong Kong has approved its third futures ETF this week with HSBC. Minting is probably my less favorite word in crypto. Least favorite word. DAO and yield. Yeah. Rebasing DAO. I think you got to have there. If they buy loads of BTC with minted TUSD, isn't that just fraud and laundering? Who loses from this? Well, the people who lose from it is, this is tinfoil hat time, but let's just say it was printed out of thin air and people bought it. They've got $1 billion worth of BTC that they bought at 26, 27, 28,000. Whenever they decide to dump that, they're going to get all of that. I don't know what I'm looking at. They're going to get all of that back to them, and it's going to also, the market's just going to fall. Because that's a significant amount that's been dumped on the market. Now, depends if they do it at one go. But there's a lot of retail and everyone else that, carried on buying in, believing that the hype was going and the price was genuinely being driven up because of demand. And so if they then do turn around and decide to sell that, those people are going to be held into it. So, yeah, there's... throwing around words like fraud and laundering, we just need to understand how that minting came about, where the minting actually took place. I mean, we see, this is not new. We see Tether printing billions out of their ass, minting out of their ass all the time. So, could be exactly the same process. Don't get the exchanges that allow TUSD pairs. Don't. The exchanges that allow TUSD pairs come under question. Potentially, but where do they operate? So I think at the moment it's just, is anyone of significant backing, regulatory body, whatever you want to call it, interested enough to do that? Or is this just another case of, as I said, 2 + 2 ends up equaling pairs, and there's a genuine reason as to how this has happened, but nobody's open to it, and TUSD are not obligated to let us know how and why they've done it. But aren't the exchanges at risk of losing lots of money trading a dodgy stablecoin? Well, I suppose in theory they are, but the vast majority of the TUSD is held by Binance, and the vast majority of that volume of where it was bought was done on Binance. So look at this here at the moment. So this is today. It's $2.4 billion worth in the last 24 hours. And it's nearly 90% of the volume of all TUSD is done through Binance. So there's really only one place in town that's actually doing it. I mean, let's KuCoin do some, it seems. Can we show all? Show 100. Let's see. I bet loads of them are just going to be Binance initially. It's not doing it. Anyway, never mind. Most, but no exposure squarely in the user camp. I don't think I've ever really used it. But also, if TUSD does have 1 billion in thin air and then comes to light, or redemptions come to a halt because there's no more money, anyone holding TUSD, that's when the bottom of it will fall out. If suddenly you can't convert your TUSD back into a US dollar, you're definitely going to be in a bit of trouble there. So I suppose that's why people are shorting it on the hope or belief that will come to light at some stage soon. But I think if you dig into any of those providers, they'll be less than above board. There's definitely still a lot of concern in and around stablecoins and actually how transparent they are with their bank balances. I mean, I think I did move from Tether to BUSD at one stage, but generally I've never bothered really moving anything across. Let's have a look. Mr. Tacker's put, exchanges also typically don't hold those tokens, market makers do. That's right, that's going back now into the market maker theory. You're absolutely right. They just facilitate them, So they are likely didn't accumulate 100 million of TUSD on their own dime. Squarely in the USDT camp. I don't blame you for now. Anyway, so potentially interesting story. Maybe just a whole lot of hype about it. But what will be interesting, just going back over what Mr. Tacos had put, if you do sign up to that market maker kind of thing, they use news stories to drive prices in a certain direction. What a perfect time to drive price in a certain direction with the spot announcement. And if you actually go towards the hours point of thing, the announcement was made in the morning and the price drove up in the afternoon or evening. So probably when the US markets opened, etc. So there's definitely some, it's not like it immediately moved up or anything. Just another thing that doesn't help the crypto cause. Yeah, sadly, I don't know that's exactly the case, but you know, we are still early. It is still the Wild West out there. We don't have regulation. And, you know, whilst that does carry a certain amount of risk with it, it carries the opportunity of the large swings that we see. I mean, when this is a fully regulated market that's been established for 15, 20, 25 years, you know, that those swings are not really going to be there as much as we see them. Well, they're going to take a lot longer to play out. And so that volatility that we are preying on and thinking that we're getting into this bull market early, we're going to have to ride it up. We may not see the upticks as much. So unfortunately, you just have to try and mitigate the risk you can by obviously diversifying yourself, diversifying your stable coins if you feel that necessary. Don't keep things on exchanges and just keep an eye on stuff. You know, understand the likes of how stable coins actually work. So I bet a vast majority of people don't understand the minting and the redeeming process. But if suddenly news articles start to come out about minting providers going under, you need to understand that that could affect the stablecoin that you're significantly in. If you don't understand that, you're going to be last to react. And if you're last to react, you're likely to lose a lot more money from it. So yeah, spend a bit of time just trying to understand where that is. Anyway, right, that's kind of where we got to the end of the news. 46 minutes, man, that's a long time. I'm going to do the research token now. And we'll get on to everything else a little bit later on. So let's bring that up. Okay. Oh, look at this. So we're going to talk about Telos. Now, this was requested 2 weeks ago by Manny. I'm not sure if he's on live tonight or not. I was going to do it last week. Things just caught up with me. So I decided to do it now. Like what I've done with other ones. There's some notes that I've made that I will effectively run through. I'm going to try and actually stick to these. It won't happen. I'm going to try. So just kind of keep it short and sweet. But if you see me looking over to the left, I'm just reading from my notes. And I will try and pick up any comments that anybody particularly has. I'll be honest, I'd never really heard of Telos until I was asked to look into it. But it is a token that's been around for quite a long time. But what is it? The Telos is a layer 1 blockchain protocol now. So we're already talking about a sector that is pretty heavily dominated. It's designed to be highly scalable, secure, efficient. So we've heard that before. Offers a range of features and functionalities that allegedly sets it apart from other layer 1 projects. So I hear you ask, well, what are they? Well, annoyingly, this week, they must have announced this this partnership with GameStop, because the entire welcome page has changed. And they had a lovely little table on this, which kind of broke it down to 6 areas, but I went back and I kind of wrote them down. So bearing in mind, these are the functionalities and features that set it apart in inverted commas from other layer 1 projects. So it's highly scalable, we talked about. It has been built specifically for the development of smart applications, smart contracts, and dApps. It has fast transaction times, it has fast block times, it has fast block time finality, which I'll explain all this stuff if you don't know what it is. Claims to be interoperable. It has staking and yielding opportunities, governance, and it is also environmentally sound. Why is it environmentally sound, I hear you ask? Because it is a proof of stake consensus model. It's a delegated proof of stake consensus model. So I was like, okay, but that is exactly what you hear from 99% of all other layer 1 tokens. So, you know, I'll be honest, I wasn't overwhelmed and in awe from reading that, because to me, that's just a standard layer 1 blockchain. What is it that it's really going to do to help it set apart? Because as I've already mentioned, this is an incredibly congested sector. And this has been around for a long time. There are some other advantages, and some of the things that I've just brushed over there, I've done them with this service. And I will go into a bit of detail and compare them to some other tokens. And perhaps we might be able to shine a light on that. But any of you remember a token still around? EOS, EOS, another blockchain. Well, this is actually a fork from EOS. Now, back in 2018, there was some concerns, some significant and justified concerns about EOS. And anyone's been around long enough, back in 2017, 18, there weren't that many cryptos around. So an EOS was a particularly big name. But the concerns were that there were just too many whales. So 1.6% of wallets owned over 90% of all the tokens. And, this called into question its decentralized nature. And, people in crypto don't like things to be centralized. And so a fork was created. And this is Talos is what came from that. Let me just have a look. The fork was initiated by a community of EOS token holders who sought to address certain governance and resource allocation issues. So there we go. So there are a lot of similarities with Talos, I'm not sure how to pronounce it, to EOS, including the name. But there are also changes and improvements that have been made, particularly around the tokenomics, which the details of that are pretty thin. I'll cover that a little bit later on. But it does have its own governance model now. It has a consensus model mechanism, which is slightly different. The economic parameters were brought in to address the shortcomings. And as an example of that, they effectively, there was no ICO for this, no C round or anything else. Just the top 40,000 wallets were identified, they were dropped it, and everyone was kind of given a fair share. So it wasn't like that 1.6% that owned 90% of EOS were given the vast majority. It was spread out. Now, as I said, the tokenomics are pretty vague on this, and I haven't been able to find out the exact breakdown of that. But I suppose the one key takeaway that I'm trying to point out is that it didn't have an ICO. And if you have bought into Casper based on the same rationale that Simon provided about that, you could argue, I'm not saying you should argue it, but you could argue that it's technically SEC proof. The jury's still out for me until the SEC actually defines that particular segment of the Howey test. I'm going to wait and see, just in case they come up with a new vague definition to make sure they capture everyone. But anyway, that's where we are. So it has its own development team. It has its own community. We'll go through the community size development. I used to do a section on teams, but it dawned on me that I didn't even know who half these people were, and I'm sure you guys didn't know who any of them were. I'll be honest, I didn't know any of these. But you can see them. They've been fully doxed. You can go on their LinkedIn profiles. You can have a look at everybody that's involved within it. They seem to have adequate experience to be within the cryptocurrency industry, and that's about as much as I can comment on that. What is interesting about Talos, and I think I'll probably try and scroll down. Maybe it's on this one. Okay. Maybe it's not. So Talos actually has two networks within it, which is relatively unusual. So it has its native network, which is built off Antelope, which I think is what EOS was built off. But it also has an EVM, an Ethereum virtual machine component to that as well, so that it can be used on the Ethereum network as well. Now, going to that interoperable side that it talked about is that anyone who uses either the native layer, the native network or the EVM, they can actually cross-communicate with each other. So you can use the technologies and the coding platforms from each individual side of it to be able to build and develop any application smart contracts across that. So you do get that benefit from that. I suppose one of the arguments could be, if it is built on the EVM side of things, then what's to stop it from just up sticks and going somewhere else? Well, maybe things like transaction costs and fees and everything else may help to bring that in line. Again, because I know people are excited about that from a Casper point of view, and I always get asked about this kind of stuff. So it's currently been on the native level. It's built for C and C++. I'm not sure if Rust is up and coming, but is available yet, but it is coming, and it's on the roadmap. Roadmap's kind of hard to interpret. With the EVM, it's Solidarity, I can't say it. Solidarity, and I can't remember the other one. I'll just scroll down here and we'll have a look, shall we? Oh, can't see it. I thought it might be there because they listed the other ones. Anyway, doesn't necessarily. Oh, and Viper. There we go, and Viper. Let's go back to my notes. I said I'd stick to, and I haven't. As I mentioned, it uses a DPoS, so a delegated proof of stake system. So proof of stake, like any other proof of stake that we have. So you require validators to validate the blockchains, to provide the security, to carry out the transactions, etc. The reason it's delegated is they use this governance protocol to go around and actually confirm, or to first nominate, but then to confirm who the validators are going to be. There's actually only 21 maximum it can be. So the first 21 with the highest amount of votes, they get in, and then anyone from 22 to 42 effectively sit in reserve. But they actually do cycle them in every 12 hours. They've got some pretty strict rules. If you don't validate within 2 hours, you effectively lose your position for 2 days, and it goes on. So, there has a process in which you can vote and choose on who is doing it, and they have some sort of mechanism to ensure that people are doing what they're supposed to be doing and to keep the network going. In terms of, I'm kind of jumping around a bit here, but it's probably worth it. So I was going to talk about security. So this proof of stake consensus mechanism, that strong security protection against the 51% task, because what it actually says here is that it requires 2/3 and then an extra validator to validate and sign off a block before it goes on the blockchain. So what does that actually mean? Well, there's 21 of them. 2/3 is 14 plus another is 15. So actually 15 validators have to confirm the block before it's put on the blockchain. So, there's no risk of a 51% attack. We'll go through some of the other advantages a little bit later on. I've talked about interoperable network fees. Does it say it here? I'm sure that it does. But as I understand it, if you use the native system, then there are no network fees, so it's free. So that's a big tick. And if you're using the EVM, the fees are incredibly low. I've got a table later on, but it's like 1 cent, maybe 2 cents. So again, not particularly expensive. And the big thing is that the fees are fixed. So it doesn't depend on volume of traffic like we get with Ethereum and other networks in which the fees just flying up, depending if it's busy, which again is another positive there. So they're just a fixed fee. The other thing is that you can't front run it because it's a fixed fee. It just works on a first in, first out. So whoever managed to put their transaction in, no matter the size of the transaction that's being looked at, it would just be done in the order that they are submitted. Whereas in other networks, you get people front loading by actually pumping up the gas fees so they can get ahead of you. And generally that screws over retailers. It obviously costs them, retail punters, obviously costs them more in gas fees. They kind of also get caught out in sort of driving of the price up of whatever the negative token is that you have to pay for things in. So that is another positive thing there in terms of you can't front run people from it. Let's have a look where we are. So in terms of the website's pretty good actually. It goes through a lot of things. It is fairly easy to read. I'll be honest though, having read through it, some of the stuff in here is dated. As an example, in here we've got transactions per second is 15,000, but on the other page, I think you scroll down, it's only 10,000. I can't remember where exactly it says it, but somewhere in here it talks about being 10,000. That was a pre-sharding thing. It does apparently now do 15,000 transactions per second, which is pretty fast. We've got to go out there again. One of the fastest proof of stake layer ones out there, if not, I mean, they say it's the fastest, but we'll call that into question a little bit later on. So there's a few things that definitely could do with updating. This whole partnership here has just depleted the homepage, which has really confused me in the last week. And I don't think it's that. I mean, it's GameStop. Some people might remember that from Wall Street Bets, but I'm not necessarily too sure what the partnership is. It doesn't seem to go into much detail of it, especially for it to just suddenly be able to take over the whole of the front page. But perhaps if I was more into this token, I'd understand that and it'd be justifiable. But it's pretty simple drop-down menus for everything. Ecosystem, you can go within there. It's got its own block explorer, as you would expect, wallets, etc. And you can actually buy the token from the website using fiat currency. We'll go through other markets where you can buy it from a little bit later on. It's got, not here. It's got its own wiki, which acts as its updated white paper, which you can go through and you can understand how things are doing it, how you can become a validator, set up your own nodes, all that kind of stuff, the technology behind it all. I didn't bother going through it because I don't really have any interest in doing that. One thing I always try and look for in these documents is the tokenomics. Sadly, I could not find any tokenomics on it, except for it to say there'll be circa 350 million Talos, TLOS, as a total supply. So that was a bit disappointing. Another disappointing part was the roadmap. I feel this is fairly clunky, difficult to understand what's been achieved, when it was achieved, all that kind of stuff. You can't really click on anything, but I've got to follow the line to here. The arrows here to say this one has been ticked, and then things that haven't been done, there's no date. It's just ... So again, not the best in terms of roadmap. I don't know how often this gets updated, and yeah, I'd have to say for me, if you're going to bother putting a roadmap out there, if you're going to actually, put your nuts on the line in terms of where you want to see your progression, one, make it simple and easy to understand for you reading it, but actually have the courage to put some dates on there, and just accept, and with through thorough communication, explain why you may or may not have got there. In terms of an ecosystem, one of the biggest things that we look for, it is fair to say that Talos has a fairly big ecosystem, hundreds of projects as it goes to here. I've selected the all column. You can scroll down. As I say, it goes for quite a while. Oops. Loads of different. I couldn't tell you. There wasn't really one that particularly I recognized. There may be some if I went through it a bit slower. But it has an ecosystem. That's one of the things that we look for. We want to make sure that people are using this and they are building from this. And we can see that people are. So again, another positive there. Where are we at? In terms of an actual white paper, so this is the original white paper that came out in 2018. As I said, the wiki side of things is more of an updated version, probably what you were more used to seeing, rather than these university doctorate type papers. And I've got to be honest, again, I skimmed it, but this is more about EOS, the issues that are with it, and why Talos is going to resolve those. So a lot of it is taking data from EOS back in 2018, which I'm sure is probably not relevant now, and why they did it. So this was talking about some of the tokenomics in terms of snapshot 40,000. So what it was is you only got 40,000 telos per account. So there you go. That's how they did it. Okay, interesting. But it doesn't really go into the actual tokenomics anywhere within this paper. Again, except to reiterate the 350 million that's going out there. But what I don't get too worried about that figure there. What I was wanting to understand, yeah, so it's 330, but it was actually another 12 million added onto it. Anyway, I'll stop trying to prove the number we got to. But what I'm trying to understand is how many were actually issued to token holders, and then how many were held back, because it had, the max supply or the circulating supply has been increasing for the last 3 years. So what is that breakdown, and how close are we getting to it? And if we are staking, and I'm assuming we're getting rewards paid to us in Talos, I'm not really dug into it to actually have a look. Maybe they've come up with a new token you get paid within. How are they being distributed, and how many tokens are held back for that? So that's something that I am interested in understanding, and to this time I don't know. As with any of these tokens, its main use is for governance. So token holders can contribute to the running of the system and the network by voting for whatever protocols they want to vote in, or to actually put a protocol up for the vote. It's also available for staking, as we talked about. We'll see yield farming a little bit later on in some of the new partnerships that they've agreed, and then transaction fees if they are being used, and depending on which network they are being used on. One of the partnerships that they signed up on was ApeSwap, which is a place where you can actually now buy Talos tokens. Now, I was like, okay, they've announced that this is it. But then when I've gone to try and sort of have a look through this, and I haven't connected a wallet, so that might be the problem. I actually couldn't find Talos on here, but I tried searching for it. It never popped up, unfortunately. But that could just be user error, because I've never seen this website before. But if you go back to the first page, it used, do you know what? I'm wondering if part of this, because it used to be up here, so it used to say ApeSwap there. Now we've got PancakeSwap, Uniswap, but no ApeSwap. So I might have to eat some humble pie, especially for Manny if you're interested in this. And I will dig a little deeper and see whether or not that's gone in the last week as well. But yeah, it was there. on the last main homepage. I'm going to stop talking about 8swap in case it doesn't actually exist anymore. No results found. Maybe that doesn't exist. I'll try and find out as to why. So let's have a look at where we are from this. So here we go. Talos coin market cap. It's ranked 375th. Unfortunately, the new system, it's in a tiny little number down there. It's got a market cap in around 46 million at the moment, and its current price is just sitting at 17 cents. It had an all-time high of about $1.35, which sees it as an 83%, or $1.43, it says here, on the 7th of Feb 2022, which is an 88% correction from where it was. That's fairly standard with a lot of altcoins out there. So yeah, and you know, this is a fairly significant base that we can chart back, playing in and around this pretty much most of 2021, which is surprise. That can't be right. That's 2020. That's 2021. There's 19, 2020. That makes sense. 2021 bull market. Yep. But 2019, we're kind of just bouncing above that price action there. In terms of markets, I think the biggest market and the most common market any of us use is KuCoin, Bitfinex, SushiSwap, PancakeSwap, Uniswap we've already talked about. It isn't Gate.io and Huobi, or however you pronounce that. You can kind of see the volumes are pretty low. Matter of fact, its biggest volume is Gate.io, then KuCoin, and then Huobi. Oh, actually, there's other ones. See, let's just have a look. BitGet, MEXC, for those of you that have said, there's ApeSwap. Oh, it's on the BSC network. Okay, that's interesting. I was on there. Oh, that's weird. I thought maybe it's because I was on Ethereum still. Okay, so there's some of the other ones. Again, not much volume when we look at that there. As we said, now this is wrong here because it says 420, but CoinMarketCap is quite often wrong. So gone on to sorry, which I do think is more accurate. And there's circa 345 million, in circulating supply as of today, and we know it's roughly about 350 million in which are printable in inverted commas. But as you can see, this has had a fairly steady release schedule, very linear approach. I mean, okay, a month ago it had a big jump up of about 19 million. Because I can't see the tokenomics, because I can't see what the vesting schedule is, I have no idea how that happened, why that happened. If 350 is the correct number and they haven't had an inflation rate, which we'll talk about in a moment, then we should be pretty close to everything out there. And if that's the case, that's a good thing, you know, especially with the price as suppressed as it is. Doesn't mean there's only upside to go, but at least we're not having selling volume pushing the price down from just supply being released to the market. We talked about the roadmap, talked about the markets. In terms of inflation, God, I have to go back to this. I can't remember where it was now. Sorry, guys. I did have it somewhere. You just have to trust me because I can't find it. But it's currently allegedly at 0% inflation. However, they have reserved the right to increase that to 1% going forward. So again, no understanding of how that might happen. I assume it'd have to be voted on, given the governance side of this. I've not bothered going through all of the previous protocols that have been voted on to check whether or not that's happened. But the fact that they open it up to potentially a 1%, we could actually see that 350 million, if it's been around for 3-4 years, now be somewhere around about 365. If it's 1%, it's about 3.5 million per year. Times that by 4, you see where I'm getting at with that. So that's something that needs to be understood. One of the other things that we like to have a look at, I think it might have been in this document. Doesn't matter, I've covered the point now. Yeah, current inflation rate of 0, which could rise to 1% for future payments of node validators and block producers. This, you can see how old this document was because it's 169 million. We're there. Right. Anyway, One of the things we do talk about is, or we do want to know about, is the community. We feel that, having a large size community to drive this forward is one of the biggest things you can do. And again, in such a busy sector, we really need that disruptive force that can be just the positive marketing from others. I've clicked on each of the different socials, but I've written them down, so we'd have to do it again. Their Twitter, they have 96,000 followers, which is actually up in the last 6 months. They did only have 91. Facebook, if you use it, they got 4,000 followers there. Telegram is 21,000. Sorry, it's 18,000 followers, but that is down. They had 22,000 followers back in December. Reddit, there's 21,500 followers there. YouTube has 30,000 followers. And to be fair to them, they are actively posting videos on there. There's about 200 videos that they've released. A lot of them are only a minute long, but it's good to see that the channel is still being actively used. Discord, they have 5,000 members on Discord. Again, that is down from 7,500 6 months ago. I know Bijan talks about this quite a bit in terms of, people are still leaving groups. Are we still in a bear market? The interest is not there. This would suggest that people are moving away, and it's not just Telos. A lot of cryptos are suffering from that as well. And GitHub, there is activity that is going on. You can see that there are things happening, not just every day, but multiple things happening every day, updates being made. So again, positive to see all that kind of stuff happening. Benefits. So whilst I was researching this, loads of different numbers were thrown out, and I thought I'm just going to pull a little table together. Hopefully you can read this all. If you can't, just let me know. We've got Telos on the top, Avalanche, Polygon, Phantom, and Solana. These were the general four that were thrown out in comparison with Telos. And I imagine because the statistics looked favorable as to why they did that. But, let's not give it a disservice. So we'll talk about block time. So the time it takes for a block to happen, it's half a second. Does that ring a bell off? For those of you that are big fans of Casper, you should know that's the same block time for Casper. You look at the likes of Avalanche, Polygon, 2 seconds, almost dinosaur slow compared to that. But Phantom and Solana are not far behind Telos, to be fair, at 0.6 and 0.7. Transactions per second. So this is the big selling point for Telos. They argue they are the fastest blockchain out there, 15,000 transactions per second. Avalanche, a paltry 4,500. Phantom, we don't know. I can't find any data on that. A lot of people have said that they can't find any data on that. The recording that most people have given me for Polygon and Solana have both been 7,200 and 8,000 respectively. But I've seen reports of 50 to 65,000 transactions per second for both of those. Whether or not they've actually achieved that, I can't confirm, so I've not put it. However, it may not be the fastest. So something to think about there. So I've kind of given that one a soft win, but Polygon and Solana. And there's the sector is big, so there's loads of other ones that may have faster time. Finality, so that is the amount of time it takes to confirm the transaction before it gets put on the block. And it's pretty close road and race, really. 1 to 2 seconds. Some people said 1 second, some people said 2, so I'm getting it 1 to 2 seconds for Telos. 2 seconds for Avalanche, 2 for Phantom, 2 for Solana. Polygon is 2 seconds. However, it actually takes 20 confirmations, and that's a key point. So it could be anywhere, depending if it's really slow, anywhere from 2 seconds to 5 minutes. So I have given Telos the soft victory there because it claims 1 second in some places and 2 seconds in others. In terms of transaction fees, if you're going to use the native and you can't beat it, it's free. If you're going to use the EVM, we've talked about, it's 0.02 of a dollar or 2 cents, and it's fixed. So it's not going to change with volume. Everything else is pretty expensive. Avalanche, basically about $1, but that varies as well, depending on volume, could be more. Polygon's pretty cheap. Matter of fact, it's cheaper than Telos at 0.01, but it is variable, so it could go higher. Phantom's the same, but Solana takes the biscuit at 0.000, 3 knots, 25. It is variable, but it's still very, very low. So whilst the native one is free, I've gone with Solana as the victory there, just because balancing it out. Now, in terms of staking, these fluctuate a lot, and I've taken these figures from today. So, take it with a pinch of salt. But if you were to stake your Telos, you get 8.59%. which is pretty good. Avalanche is up to 7.5, Polygon's up to 5.5, Phantom up to 6.5, and Solana up to 6.8. So on the face value of things look great, but actually you look at some of the other layer ones out there and, you know, they're 15% plus. So in this battle, it wins, but there's plenty of them out there that could get you better returns. Of course, you've got to factor in inflation rates and everything else that goes with that. So this is why I'm a bit unsure about the tokenomics, because how can they still be offering 8.5 or 8.6%? Let's just call it 9% staking rewards APY if their entire circulating supply is out and there's no inflation rate. I don't quite get that. I'd love to understand that a little bit better. Energy consumption. So this is a big tick in the box. A lot of people like to sort of hark on about this one. You know, ESG requirements, etc. It's proof of stake, so we know it's going to have particularly good energy consumption rates. And for Telos, it's 0.00002. Avalanche, well, you can kind of see it's better than all the other ones. So it kind of comes out on top. So actually, when you look at it, compared to those, it actually seems like this could be a better project than a lot of the other ones. I mean, you know, we talk about I've talked about block time, transaction speed, fees. The no front running is another good thing as well. You know, just helping out the little guy, first in, first out. You know, I don't know why everyone isn't like that, to be honest. But that's where we are. No ICO. Got to be a positive. Well, at this moment in time, a positive. And the fact that, despite not knowing the full extent of the tokenomics, if what we've read is to be believed, the vast majority, 90-odd% of the tokens are in circulating supply. It is secure. Proof of stake, the delegated proof of stake system with the greater than 51% attack. That's 2/3 of validator plus one mechanism. As a security there, and as I said, it does have a good sized ecosystem, so you know, on the paper value, I think it stands up there, but it does have drawbacks. You know, we've got to look at it realistically, and for me, these drawbacks are probably more my opinion than the facts I gave you with the benefits there. But I think it's an incredibly busy sector. If we just go, you know, this is DeFi Llama, these are all layer ones, and I mean, if you're wondering where it is, it's dropped down to number 40. That's not necessarily what I'm trying to point out here. What I'm trying to point out is look at the size of the sectors, you know, and what it's competing against, and the size of the names. And this is not a new token that came out in the last 24 months. This thing's been around for 4 or 5 years. So, you know, I would have hoped it'd be more established than it currently is at the moment, if I'm perfectly honest. The fact that I've not really heard of anything yet means it's got a lot of work to do to disrupt some of these bigger names that are up here. And I'll be the first to say, I guarantee you there will be a layer one that comes out of absolutely nowhere that no one's ever heard of, that everyone will be raving about, and it'll be the big thing, the next Ethereum killer in the next bull run. And hey, it could well be Telios. Of course it could, you know, with some of the statistics we put out there, but it needs to start making a splash. It needs to start actually doing something and taking advantage of this first mover advantage. That's what I was trying to say. The yielding side of things, we didn't get to talk about the yielding farming because I couldn't find it on ApeSwap, but that worries me, you know, where you suddenly got liquidity pools, and you remember back in the day when we were doing all that kind of stuff, it just sort of sends a little shiver down my spine. I suppose if you get in early and you're not too much of a degen, you get out, there's plenty of opportunity to be had there. But ultimately, it just feels like the greater fool, as in someone's going to be left holding that bag. Maybe that's just the whole of crypto. Right. Where am I next? Inflation rate. So I don't understand the tokenomics. That's the big thing. And for me, not knowing what the tokenomics are, I find that difficult to get into anything. Don't understand how the staking rewards are going to work given the current circulating supply versus the max supply. Don't understand where we currently sit with the inflation rate, and if it's only going to stay at 1%, that's pretty good. Most of the other ones are far higher than 1%, so that's fine. But how that's going to really marry up with paying for the node operators or the validators, and also covering APY, yeah. So, you know, for me, if you do want to stake it, you can go to this website called Staker1. So it's staker.one. Connect your wallet as you would do. You go through here. And then, I haven't got a wallet for it, but you'd obviously have your balance in this section here. You just put how much you wanted, you'd stake it. You can see that you have to wait 4 days to unlock it. And you can see that interest at the moment is 8.26%. So actually it's down a little bit from what I put in my spreadsheet. But yeah, so that's kind of where we are. So yeah, for me, in conclusion, I actually do think this has got some great things going for it, but it's not something that I'm actually particularly even interested in following or investing in. A couple of reasons. The fact that it's been around for so long and I haven't really heard of it, I think just says, is anyone actually talking about it? And if it was as good, delivering as good, with as good an ecosystem as it's portraying, I think a lot more people would be talking about it. I would have come across this name a lot sooner. I think it's in a very competitive market, and in a market which I'm actually quite invested in. With you take things like Ethereum, you take Polkadot, you take Moonbeam, you take Matic, you take Near Protocol. I've got a lot of layer 1 tokens. So do I really need another one that I don't know anything about? No, not really. So I'm going to go from there. And you know, this is the same argument that I used for Casper. You know, I understand the technology behind this, as I'd say understand. I appreciate what the technology is and some of the statistics that everything is getting thrown out for Talios, like with Casper. But ultimately, I'm wanting to see actual everyday real-time use and it being used actively a lot. And whilst it might have an ecosystem of hundreds of projects on it, if those projects aren't being used, then how is this actually gaining any traction? Similarly, when we looked at Casper, I think it was using 10 merchants worldwide. You know, it can have the best trilemma solving problem there is, but if it's not being used, it has no utility. And the same for me, unfortunately, goes for this. So Manny, I hope that helps for everyone else that had never heard of it, but we're interested in it and stuck with it. I hope that helps. You know, don't not buy it just because I said it. It's just, you know, someone asked me to look at it. I've looked at it, but I'm not that fussed about not looking at it again. Right, let me have a look at some of the questions. Total one isn't really going up, so that helps conspiracy theorists. That goes back to cost question. We'll have a look at later. Alex Becker's decent Twitter account for following gaming tokens. Yeah, I've seen a few videos he's done there. Casper isn't built on Phantom. I think it is actually, yeah. Solana, AVAX, Polygon, Phantom seem to have far bigger Reddit communities. Yeah, I mean, they do. You know, communities are important, you know, especially for getting the word out. Now, in the eyes of the SEC, as we know, with the likes of Polygon and a few of the others that have been listed as securities now, using your social media platform to promote, particularly promoting listings on the exchange, is a big no-no. So maybe Talios might also survive a backhand from the SEC for not being so out there. But it's a double-edged sword, because if no one knows who you are, I mean, you know, 90,000 followers is great on Twitter, but how many of those followers are actively purchasing and bigging it up? So 21 people on Reddit. Solana has 161, AVAX 42, Polygon 25, Phantom 39. Hard to compete from a marketing angle, and it says Angel, even if the tech is better. Yeah, Casper only has 4.8 on Reddit. Seems that Near, Sol, AVAX, Matic have better marketing. Yep. End of the day, marketing, usage, and community can create real prompts ahead of better tech. I agree. So yeah, that's where I am with that. Hope that one helps. Okay, let's go back, have a little chart in, and try and be done in 20 minutes. How about that? That's the plan anyway. Thanks everyone for sticking with it, I must say. Right, let's have a look. BTC, this is my market maker charts, as you've seen. We were going to have a look at the weekly first. I mean, you know, weekly is looking nice, you're right. Now, it depends on how you want to draw this one, but big M there. Drop 1, drop 2, drop 3 into the W. I mean, oops. Do that again. White work, guys. 1, 2. You could have it like the W like that, or you could have the W like that. Doesn't really matter. This is the base, the double bottom. Let's zoom in a bit now. And then let's see what we can do with this. So this is going to look pretty much like the daily to me. Let's just assume this is the W. And there's rise 1, pull back. Rise 2, pull back. And the start of rise 3. Fairly tasty levels to look at there. In terms of immediate targets, vector zone recovery, we're looking at the level we're at now, 31,000, just under, to around about 34. So let's just mark that, because when I change, this vector zone will disappear. So that's what we're looking at. But also, 50% retracement line. Okay? So I think you're right, Mr. Tacos. The weekly's looking pretty tasty for a move up. Now, given this is the weekly, that's a long ass time for that to play out. Same with the daily. So, that drop took the best part of a year. But before we actually climbed out of it, it's the best part of 14 months. So we've had 6 months here. We don't know how long it's going to be. And then we need to form an M. And then it's a case of where do we reattack. But if this is going to continue going up, and this is the bottom of the consolidation period for rise 2, then in theory, we should see the base now on the weekly in and around 25k. So it could be the new target. Maybe you look at just down to this recovery vector zone, maybe call it 24.6. But if the weekly's to hold, that'd be the big level that I'm looking at. If that breaks and closes on the weekly, then we have to reevaluate where this rise 2, if it's ended, and if we're actually now looking at a rise 3. But if I just get rid of those lines, should have done that because now I've lost my box. But what I want to draw your attention to is the 50 EMA. Look at how price has just respected, bounced off it, held support on it, and then thought, what, I've had enough, I'm out, and it's gone. Never really broke. It certainly didn't close below the 50. So again, that's something else. That's going to continue to climb up. But that's going to tie in here. So we might wick down through, but for that to hold, a break of the 50 and a close below it, and then tying in with sort of 25,000 level, we're going to say that this is a failed rise 3, and it's either part of a period consolidation within rise 2, or we've got our pattern wrong and we're looking for an M formation somewhere. So yeah, that's certainly what we're looking at. It's a good spot there. We drop down to the daily, and I tell you, the daily tells you a pretty similar picture, except for I didn't draw my box on it, but the box was 31 to 33.6. So it was here, wasn't it? That was my box from the weekly. Its 50% level must have been at 32.6. So let me just, can I draw? There we go. So looking at where we have here, we talked about this last week. We're thinking rise 3. Let's just get rid of that. I know it looks kind of messy if you don't know what you're looking at, and apologies if you've seen this for relatively new, but again, we'll start the drawing from the beginning. If I can find the drawing tool. W, beginning of the year, rise 1, down, rise 2, down. This feels like a rise 3. I mean, the speed at which it busts through the 800, the 200, the 50, with force there. It's taken out that level. We've seen it. It is stalling there. And as I mentioned at the beginning, just because, we don't have to see a huge move higher than the rise 2 peak, getting back to that level could still be a rise 3. So we are seeing this stalling, but it's not really showing too much weakness for BTC at the moment. More of a consolidation at previous point of resistance. So yeah, I think that's there to go. Oops. If we are now thinking about where we can go, I mean, the vector candles here, we'll have a look at the high block in a moment, but there's a vector candle on the daily from our 50% retracement line within the weekly to the top of where our weekly box is. So again, just adding a bit more gravitas, if you will, to this level here. So I don't know how well this is going to work, but let's call that one a different color. Oops, that's not what I wanted to do. Kind of just see this sort of merging over that there. So it's going to look a bit messy, but that's looking like a little. Now, within this rise 3, we can expect some pullbacks there, and we can see some vector candles, all the way down to low 27,000, which kind of tying in with a retracement back to the 50. Could still be within a rise 3, just a pull back there, and we've seen that on rise 1 and on rise 2, taking semi breathers before finalizing the kick, but the overall move has still generally been upwards, and I think, you know, that could conceivably happen back down to here. I think, again, you know, in theory we could go as low as 25,000. We might have to then consider whether or not we are failed R3, or it's a start of an M formation, or we were actually just within a consolidated period of rise 2, and, you know, that's just where it was. A bit similar to what we had in rise 1, where it dropped back down, bounced back up, but it came, and we're still counting this as part of rise 1. So unfortunately, not the clearest of pictures for us, but for anyone that's currently in the market and got some BTC, there's some healthy moves to be had there. And the next levels we might want to have a look at, you know, we've got that 34,000. We have a look at some previous price action. That's tying in, you know, with the heads of this drop after the lunar, this sort of wick down here, and a lot of price action in and around the summer dip, and the rise up at the beginning of 2021. So, you know, that 34,000, this is the level here we're talking about. You know, we conceivably see that is the end of rise 3, and then we start to work our way back down, as it has shown to be an area of significant interest. So to get through that, we're going to need some decent momentum. Right, before I drop down the next time frame, let's have a look at what people are saying. Mr. Tacos, there is a possibility as well that, what you thought is drop level 2 and 3 is actually just drop level 2, and this has just been a pullback or drop 3. I'm torn. So going back onto the weekly, let me make sure I finish on the day, then we'll have a look at that. Depends on how much TUSD we can mint. Yeah. The monthly most recently recovered vector is nearly recovered too, which makes me wonder about more upside since next vector is much higher. Okay, so let's just go back to the weekly. Let's get rid of this. Do it that way. So what you're thinking is drop 1, drop 2, big drop, pull them back up. This is going to be the turnaround point before drop 3. And again, drop 3 doesn't necessarily have to go much lower, but I tell you what, that's max pain option there, isn't it? You know, we look at the hype cycle, that will be full on anger, despair, and everything else. But there is a vector candle down there to suggest 14,000, you know, could well be a level. If that is the case, you know, I mean, it's going to take so long to get there. And then, you know, building up, it feels like we've still probably got best part of a year of a bear market left to play. If that were the case, just given how long it's going to take to get down there. But you can't rule it out, absolutely. Just because 4-year cycle worked in the past and halvening's worked in the past doesn't mean it's going to the next time, especially with market makers maybe more prevalent in the market, as you say. So definitely want to keep an eye on. Now, this is like a tortoise, though, so we don't have to be watching this every day, but we just need to have a look at it. But it doesn't change the fact that the turnaround point, whether it's a pullback of a drop 2 or we're in a rise 3, the vector candle recovery is still a similar place. So we've got that. Let's have a look at the monthly. Oops. So what have we got here? I mean, it doesn't even show. I probably need an older chart. I'll have to go on to this one. I mean, you could argue, if you were playing the monthly, you could argue, well, W around here somewhere. -1, drop. Oh, no, that one goes high. Disregard. It's going to call it that rise 2, and then this be the M formation. But this being the M formation, however we got there, drop 1, drop 2, essentially drop 3. I mean, the vector candle here is, you know, I think we'd all be pretty disheartened if we ever got down that low. But anyway, I get what you're trying to say there. Let me just have a look. That lines up with the monthly as well as a point of rejection in terms of here. Okay. What are these? What have I drawn there? And what they are? Oh, it's because it's a different chart, isn't it? Right, okay. And there's 33 line in with wicks and everything else, body closes. We haven't actually got the chart for a while. I might try and find it. In fact, I'll do that when we get to the blank charts. Let's get a bit closer to home, shall we? I mean, this 4-hour chart. I think because I haven't looked at anything for a while. Okay, I have to go back to the perp chart. Well, I'll go back to the perp chart for this one anyway. I mean, last week, for those of you there, I really struggled to find this W. I kind of agreed that it was going to be around about the 14th. So this being the W. I mean, is that rise 1 consolidation, rise 2 consolidation, or rise 1, rise 2? This is, and then this, is potentially the consolidation for rise 2 before a rise 3. That ties in with what we believe for the daily, but on here, vector recoveries, we're all the way back up at actually 35,000. So we've got to get through the dailies. I'm just trying to see what that one is attached to. Over there, okay. How about moves a little bit closer to home? Let's just do one more on the hourly, and then we'll go from there. Maybe have a look at something else. I want to have just a quick chat about dominance. Might be where we have to end it, but let's drop down to the hourly, see what we can see. Getting a bit more information now in terms of session times, everything else. So the chart's starting to look a lot messier. I'll give you that. So what have we got? Let's try and spend a bit more time. We've got that W. If we're calling that the W, we've burst through the 50. We've consolidated. We've come back to it. We've built on it, and then we've burst up. So that's why I'm thinking R1 and R2. And then we've had a real big consolidation period, and we finally, like, you could argue that was failed. It wasn't part of the rise 3, you could argue, and it's more just because it never got up there and then broke through. It's just kind of hugged it again. And are we ready to go? Or you could go, no, Harry, you're wrong there. That is R3, and then we're somehow going to form an M, and then we're going to start a route down. I'm going to stick with the first one. I think we're potentially in that consolidation and a move up. That's what I'm looking at the moment anyway. In terms of zones, we've got 32, 7, so basically 33, and we've got 34. 2 levels that we are no longer on my charts, but you saw me outline them, which tied in with the daily and also the weekly. So they're for me big levels. We go to high block. I'm going to have to log in. Taking its time. Okay, maybe we don't get finally. Right. So this is on the 12-hour. Let's put it on the monthly. Let's run it. Just see what we see in terms of levels. I mean, bearing in mind we're talking about the weekly, we might actually have to go to the 3-month, to be fair, and work our way back down. Let's just zoom in. So 33 is here. I mean, there's still that decent level at 32 to be taken out there. But what is surprising is there's pretty much nothing down here, which suggests a lot more people are going short at the moment. So route of max pain potentially is up. And everyone down here is sitting pretty, from this move, this ETF, this TUSD move that's driven the price up. Oops, I didn't mean to do that. How do I get this back? So looking at that now, certainly seems like there's potential for the more attraction upwards, and to take that. And I think options expire this week as well. I'm not going to bother going into that because I've got to go through the questions as well. So let's speed this up. So certainly there's a level 32, 33, and there's some going up to 34, but it's more looking there. But what's interesting, the big point down about 24,000, 76 billion. I mean, you got to remember, even some of these little levels that look purple like the background, they're still like 7 billion. There's still some decent amounts building up down here, 15 billion at 29,000. So there's still stuff to aim for people. But the bigger numbers, because we're talking about daily and weekly, we're talking about larger moves, would be there. Right. One thing I wanted to talk about was dominance. So this is dominance at the moment, 52. You know, I thought 50 would hold. We're breaking that. We've been then talking levels would be 52. Bijan's been keeping us updated with Ben Cohen actually saying 63, I think, is where he thinks we might get to before the start of the alt run season. And, you know, you can't rule that out necessarily at the moment. I'm just going to put it on the weekly just so I can zoom in a bit. You guys can see the charts a little bit better. You know, that's 60. I want to say you can't rule it out because nothing in crypto you can really rule out. And I'd like to say I don't believe it can get there because I've been saying that for a while, so I'd rather stick to my narrative. But, you know, with the strength that BTC has been showing, I don't think we can rule it out. Now, what's that mean? Because a lot of people then immediately jump to, okay, well, Bitcoin dominance is climbing. There's no point getting into alts because alts are taking a hammering. I've made this point before, and I just want to stress it again. Alts are taking a hammering against BTC. If you're sat on the sideline in USD or any form of stablecoin, it isn't guaranteed that they're still taking a hammering. And what do I mean by that is just because the BTC dominance is going up doesn't mean that the USD value in altcoins isn't also going up. What it means is that the move that Bitcoin is making is greater than that of the alt markets. So they could still be moving up in both of the sets, but just Bitcoin moves up faster and quicker. And so if you are sat on the sidelines, there is still potential that you could think, oh, well, I might as well wait till BTC dominance peaks and starts coming back down. But actually what you could find is your favorite altcoins has still gone up in price over that period. And so you're still buying less. And so that's just something to bear in mind. I'll try and give you an example of this. So let's throw on my old favorite, DOT. So this is a DOT USDT chart. So let's put it back on the daily. No idea how this is going to look. We might end up changing that. Actually, I am going to put it on the weekly. I've got a feeling it's not going to show me. But what I'm going to do is I'm going to overlay a .BTC chart as well. So I want that as a new price scale. Close that now. Okay, so the orange squiggly line is DOT's value against BTC. And then the bars are DOT's value against US dollar. And generally, it kind of follows it, as you can see. But what's interestingly has happened now, oh, this is where I'll make this a bit bigger. Maybe daily is the best. I might try 3-day. But can you see? So DOT has formed some form of double bottom or certainly double touch point at $4.30. But, and then it started to climb. But in that time, the entire time, except for a bit where it was static, .BTC value has continued to fall and has got much lower. But the price of DOT, so if you were sat on the sideline wanting to buy your DOT, has continued to go up. Matter of fact, it's only got to the same level it had down here. So all that other period, while its value versus BTC has fallen, its price has actually been higher. And had you wanted to buy in at any of that time, you would have been paying more than had you bought here when the BTC price was at 26, 3 zeros and at 26. So I'm not telling anyone to buy, and maybe I'm trying to just make myself feel better because I'm, heavily into alts at the moment. But when I look at my portfolio from a dollar value, especially after the last week that we've had, I'm generally in the green again across the board. Yes, in terms of BTC, I'm still taking a kick in, but me dollar cost averaging in over the past 6 months has been a better option for me. So I just want everyone to bear that in mind. People are focusing quite heavily at the moment on Bitcoin dominance, and rightly so. And if you're in alts already, that's when you're feeling the pain of Bitcoin dominance the most. If you're on the sidelines, you may need to consider what your move is, because as I mentioned, and as I've just shown, the price in terms of USD can still go up whilst the BTC value continues to drop. Now, as I said, most of the time, it kind of mirrors it. But in this sort of phase between halvening, end of a bear market, halvening where Bitcoin normally goes on its run, that's when we see the altcoin suffering the BTC value, but they can still pick up some momentum in the dollar value. So have a look, go on some of your favorite altcoins, have a look, just do what I did, get your USD pair as your bars, and then just overlay a line and just see where it is. And, maybe it'll help you make a decision on where you are, especially if you're kind of like paralyzed with what to do. Because there's a lot of different opinions going around at the moment. Simon's very suddenly gone back in. He's almost 85% in if those orders fill, which he placed today. And for some of you guys that were on the sideline 2 weeks ago with zero, where he was, that can feel like you may have missed the boat. So maybe just try and sort of help you alleviate where you are with that. I'm not going to go through every single price action. I think the one thing I will say is whilst BTC is looking particularly strong, some of these altcoins are still looking quite weak. There's a lot of failed highs, DOT being a prime example. ETH's kind of failing to take that high out. It's starting to curl back round. No one really follows BNC. Glimmer's always struggling. Link, it's had a good run, but it's starting to come back. Near's the only one that's kind of bucking the trend, but you can see it wicked back to that previous level and was rejected back, and that seems to be the story at the moment. Most altcoins have not taken out their recent highs, and so in terms of bucking the trend of the downtrend, that's what we'd want to see, and that can be potentially quite alarming, especially with what I've just explained. So just bear that in mind. Whilst BTC is going strong, other altcoins may not be doing as well. Okay, let me have a look at some of these questions. Thoughts on Grayscale BTC charts fundamentals? I'm considering allocating some funds through my SIPs and ISA. So Adam, this is kind of an interesting one for me because I'll be honest, except for knowing what Grayscale is, it's not a chart that I particularly follow, and it's not something that I'm necessarily interested in getting in. And I spoke to a few, I was going to say colleagues, but friends of mine, to try and just make sure that I was thinking in the right sense. But because I'm only an individual, I'm not an institution, so I can invest my money. I live in a country in which I can do that into BTC. For me, I'm going down the route of I'd rather just own the BTC myself. I'm crypto savvy, and that's what I'd look to do. Now, I understand that doing it through a SIPS or an ISA potentially gives you some tax benefits, but also depending on how you're buying your BTC direct, you can also see potentially some of those benefits as well. So it's not something that I really look at that often. The other thing that you might want to consider if you are looking at getting into GBTC is other companies such as MicroStrategy, which if you ever look at the stock price of MicroStrategy, pretty much mirrors the Bitcoin chart. But the benefit you've got with MicroStrategy is it's actually a company that delivers things, that creates things, that I was going to say builds, but you understand what I mean. And so you have, I don't want to say income, but revenue coming in. There's also an opportunity for dividends and everything else, which may be more appealing than just going for GBTC. Now, there was a time where GBTC was at a significant discount, and I'll be honest, I've not looked at the chart to see whether or not that started to balance itself out. But I can assure you that after the ETF announcement, it shot up drastically. So any benefit they potentially had is probably eroded significantly, if not eroded completely, from where we saw last week. So that's kind of just my views on it. Potentially, if that hasn't helped a great deal, maybe ask Siam, see what his views are, and go from there. Reese has put, if CAS is much like BTC, can we expect the price action to occur according to similar patterns? If so, there is a current W and 2 rises with consolidation, suggesting a third is to come, possibly sometime today, looking at the 4-hour chart. Would such a rise necessarily be expected to surpass the most recent high, or could it, in this case, just create a double top? But to go higher would require busting through a significant trend line that is currently seems to be Koboing off, albeit a double Kobo, but these are common enough. If it did bust through, could it be due to the performance of the tech, as Siam posted about yesterday, and would matching all-time highs then not be a reasonable expectation, perhaps then creating a big double top, instigating the ultimate drop that is generally expected? Am I thinking too far ahead? There is a lot of questions within that. Okay, before we look at the charts, One of the things you've got to remember with how I interpret W and M patterns, I call it the market maker pattern, which generally means that market makers have to own the tokens to be able to manipulate it. There's still an argument to be said because we're not on a major exchange yet when the liquidity is not as high as it could be given its market cap. That the market makers, haven't accumulated a significant amount of those tokens for them to be able to do that. That being said, we can certainly look at the TA. I'm going to look at the TA in a moment because there was a question you asked there, which potentially was FA, fundamental analysis, that you may be confusing with TA. If it did bust through, could that be due to the performance of the tech? So now you're looking at, could it bust through a trend line, which is TA? Could that be through the performance of the tech? I'll stand by what I said when we looked at the research token. I don't think the tech, not that it's not impressive, I don't think it's as important. I would argue 90% of the people in our Discord group alone don't even understand the tech behind BTC. Yeah, and they're still happy to trade it. They just don't understand how it works. Most of them, if you ask them what the consensus model is, they'd probably bumble around a bit and maybe stumble across a word which would be a guess. Because people don't really look too much into that. They more look at the investment opportunity and the dollar value. That's human nature, and there's no reason why that would be any different for any other project that's out there. So for me, the tech isn't enough. As good as it is, as fast as it may be for a proof of work consensus model with the DAG and everything else, which I completely get, I just don't think people really care about the tech. I think people pretend to mention it to sound good, sound intelligent, etc. But when it comes down to bottom dollar trading, people are just looking at price. So for me, it's TA that takes it. Now, if Casper was to come out and say, we've got a partnership with Barclays Bank or something like that, and we're going to be their token or their payment method when they enter the cryptocurrency, then that's fundamental analysis that could break through it. But again, that's not necessarily from the tech. Yes, the tech may be why Barclays signed up with them, but it's ultimately that partnership with a big name, which is, driving some real world utility, which I think would drive that. So that's my humble opinion. Yeah, that's where I'm at with that one. Let's go and have a look at the chart. If I can find a chart. Yes. 4 hour, let's get rid of this. Let's get rid of, why is that just not delete? It has been thick here. I am being thick. Let me just try this. There we go. So 4 hour. So what you're thinking is some sort of W, rise 1, rise 2, potentially rise 3. That's where we're looking. And that rise would coincide with taking out the previous level at around about 3 cents and potentially getting as high as, well, let's worry about it getting to 3.3 cents first, but looking somewhere in and around here, which absolutely could definitely be the case. And market maker theory, moves happen in threes. There's definitely 3 distinct moves here. Now I tell you what we'll do. We should really throw it on this chart. So we can have a look at. So what do we have? At the W, bounced off that strong move against the 50, consolidated back to the 50, strong move again, consolidated back to the 50. Really looking like they are 2 clean rise 1 and rise 2s from a W there. And it's had another strong move against the 50 here. And so, yeah, I think there's definite possibility. How high it gets to, is anyone's guess, really. Loads of different things I do to maybe have a look. Fib levels. So we've got 3.31, 3.36. What does 3.36 ties in with this level up here? So maybe that's the level. There's no vector candles from anything previous, but maybe just over 3.5 cents could definitely be a level. 4 hours, that kind of time frame, probably looking a week or 2 for that to play out, but I think that's definitely a possibility. Going back to in terms of then going higher, and I haven't drawn your line. Oh, you did something in Discord, didn't you? Let me see if I can bring it up. Here it is. Just move it over to here. Doesn't make it particularly big. A and B. B takes it to about 40 cents. So what I was talking about was B, because that takes it around about 3.5 cents, which is what you mentioned. So this top here, 40 cents would be that top. I mean, you know, once it gets moving, there's no guarantee it won't stop there. But, you know, what we might end up seeing is a rejection here, an M formation, and that second peak of the M could go higher, maybe taking out one of those levels that you're talking about before rejecting. But we're getting close to rise 3 now, so we are expecting a turnaround at some stage if we're going to follow that method. Whether that comes in end of July, beginning of August, when these ASIC mining rigs get shipped and start getting used, you know, we'll have to wait and see. But we're pretty much at the end of June, so we're only 4 or 5 weeks away from August. I don't know when they get released, I'll be honest, I don't follow it, but something definitely to consider. In terms of, are you getting ahead of yourself? There's nothing wrong with understanding where you're going to be, but it actually comes down to how you're treating this. If you're just buying and then you're going to sell the first whiff that Simon says that he's selling his, then there's no point in you looking at that. It's too far ahead. But if you're actually genuinely buying spot to hold and you're willing to hold it for the next 2 or 3 years and build that position, then yes, you want to start looking at positions where you can find genuine levels to take partial profits to recycle if price then pulls back. And that's just how you will become a successful trader. You know, buying high, selling low because you think you're going to sidestep is not the best way of doing it. And, you know, I would argue that if you feel you're confident that Simon's assessment of ASIC mining and Binance listing is going to cause it to dump, you know, you got to question why you're putting so much money into it now. Yes, build a position now, start building some, but accept that you're going to take a drawdown, but you've got the ammunition in reserve and you've got the patience to last a couple more months to buy the positions when it goes, and actually do start buying it when it starts to drop because of those factors that you think it's going to be. But yeah, you can start thinking about reaching all-time highs if you're genuinely looking to build a position. If you're just looking to move in and out every 4 weeks, I wouldn't worry about it yet. Thomas, things are moving quite fast, at least for a beginner who struggles with the technical side and some things as well as, and you know, e.g. buying cast. We hope I have a place to go where one can see where it's done. I know that Simon puts out a lot of his videos. He did one today of placing orders, which effectively went through Mexi. Yes, it didn't show you how to set up an account, but it's there. I will have a word of him. What I would say is if you really are struggling, Tom, just drop me a DM. I'll be more than happy to try and help you. If it is CAS specific in terms of wallets and that, I may have to bumble around a little bit because I've not got one and I don't have an account with Mexi. But you know, generally for anything else, that's one of the reasons I'm here. So whether you put it in general chat, as in on the Discord itself, or you just send me a private message, I'm more than happy to help out, and I'll try and be as quick as I can in responding to those. Right, that's kind of about it. And what I'm going to do is I'm going to hit full screen straight away so I don't get lulled into going into anything else. I would read through some of the comments. Karen still thinks that ETH is going to nuke to $600. Would you agree? I mean, it's a long way for that to go. He's been pretty spot on with where things are going. I don't have that order on Binance of 400 anymore because I got all my money off it. I didn't need to. But there was a time where I believe 400 was a level it would get to. I'd be happy if it got down to 1,000. I'm not really in any ETH at the moment. I am considering getting some. If it got to 1,000, that would make my decision a lot easier. But that's still a 40% drop from where we currently are. So big move. A lot of things have got to happen. You think about the size of some moves, the likes of FTX and everything else. We rarely saw a 40% drop. But doesn't mean it can't happen. But when alts moon, they moon very quickly during bull run. Exactly. Building position is the best thing to do for that. I'm very happy with the positions that I have. And I'm just going to have to sit in a bit of the red. And yep, I might, in some people's eyes, have made the wrong decision in getting in early. I'm not 100% in, so I'm comfortable with where I am still buying it. But I'm already at the mindset where I'll be willing to take some out early as well. Because I'm not desperate to catch the bottom. I'm not desperate to catch the top. Everyone, it's a rite of passage. You will mess it up one cycle and you'll learn it the next. That's just unfortunately how it is. Stuart's got to go. Oh no, Simon to Casper and GMX have no previous bull run experience. Does this concern you? Has gone too heavy? Okay, so great question. For me, it's all about diversification. So I'm not saying get in 100 projects because that's what I did last time and it's too hard to manage. But going in on 1 or 2 projects heavy, very heavy, really limits your ability. If one of those projects doesn't do what you hope it's going to do, you've got no exposure anywhere else to recover that. And like you say, for me, they are unproven. GMX, I think, will probably do well. It's our research token for next week, so maybe we'll have a better answer there. It's an exchange token. It's a very popular exchange token. You can do leverage trading. We know degens will come back in the bull market. So I think it will do well as a token because it's got real world utility. That's the reality of it. Casper, I'm unsure of. If it gets down to 1 cent, like I've said, I will put a small amount in. But I feel much more comfortable just taking a small amount there than putting 40% in unfortunately something that is unproven. And I love the passion that people in the group have about it. Passion doesn't get you everywhere. You know, I want to see that converted into actual real world utility. And I still have a concern from a mining point of view that market cap is artificially high because 90% of the circulating supply is not circulating. It's just stuck in cold storage on people's hard drives and it's never touched an exchange. And so all that's been touched in exchange looks like it's heavy activity because it's a very small fraction and the price is then artificially inflated across everything. And when people go to sell, you know, I think that will drop not just a little, it'll drop hard. Bit like Ravencoin did. Ravencoin went on a massive run in 2020 up to 30 cents and then dropped astronomically hard down to like 1 cent or something. So I feel that could happen. Problem with the chart reading on CAS is we don't know how the new mining system will affect the project. Yeah, absolutely. And so that's a fundamental analysis, which people have already started to speculate on. Really hard to measure when to go into Casper for a long-term buy because we have no clue how far the ASIC mines will carry the project. Very true. As Mr. Taco said on a call a week ago, you could cause 90% corrections. Yeah, I mean, so someone posted it on Reddit that because of how effective these ASIC mining tokens are, it can go to like 0.0005, so basically half a cent, and still be profitable for these ASIC miners. Still, they can have that churning of sell pressure, which, you know, is a huge drop from where it is now. Issue is you don't have proof of how GMX will deal with the strain in the bull market. No, we don't. And well, next week I'll know a bit more. I don't really know too much about it. Right, that's 2 hours for me. We covered a lot today. Went through the news, bullish comments from the Fed. We had a look at ETFs and the timelines, a bit more breakdown of where those are. We talked about True USD FUD and what that might have done, particularly with Binance. And we'll just see how that goes over the next week. A lot of them, we'll just have a look. We had a look at the new research token, Telos. I'll post my notes. I'll post all the stuff in Discord about that. I'm not sure I'll do an independent video on it necessarily, but I hope it helped. And then we had a look at some price action. Sorry, I didn't cover too many alts, but I do try and keep these down to 2 hours max. And as I said, I just generally have a feeling that Bitcoin's doing well, consolidating nicely. It seems to have the narrative to go to the upside. I think what will end up happening is it'll end up crushing alts in doing that move. So that's where we are. But yeah, other than that, just want to say thanks again, everybody. GMX research token for next week. And then I have 2 tokens already, Aave and another one, can't remember, for a couple of weeks afterwards. The only other thing to say is it's my birthday a week today. So I'm going to be holding the Avengers call on Monday next week. So it'll be Monday night, which is the 3rd. So hopefully you can all make it there. If you can't because you're busy on Mondays, it is recorded. It'll be out the very next day. All it leaves me to do is just say thanks, everyone. Hope you have a good night, and I will speak to you all soon. Cheers now.